Hello everyone, welcome back to the channel, where we make complicated financial topics easy to understand, giving you the knowledge to take charge of your financial future. Today, we're diving into an important subject that every parent, future parent, or anyone interested in education should know about: the 529 Education Plan. By the end of this video, you'll be equipped with everything you need to understand how a 529 plan can help you save smartly for your child's education. Don't forget to hit that like button, subscribe to the channel, and share this video if you find it helpful. What is a 529 plan? A 529 plan is an investment account specifically designed to help families save for future education costs. Named after Section 529 of the Internal Revenue Code, it offers significant tax advantages, making it one of the best ways to plan for your children's education expenses. In simple terms, a 529 plan is like a dedicated savings account that grows tax-free, as long as the funds are used for qualified education-related expenses. Let's take a deep dive into everything you need to know about it. Two types of 529 plans. There are two types of 529 plans you need to be familiar with. 529 College Savings Plan. This type functions much like a traditional investment account. You contribute money, choose from a selection of investment options, usually mutual funds, and hope that your money grows over time. The earnings are tax-free as long as they're used for qualified education expenses such as tuition, room, board, and supplies. Prepaid Tuition Plan. The prepaid tuition plan lets you lock in today's tuition rates for the future, which can be a significant advantage considering the skyrocketing costs of higher education. However, these plans generally apply to public, in-state universities, which means flexibility can be limited if your child decides to attend a private or out-of-state institution. Key benefits of a 529 plan. That you have an idea of what a 529 plan is, let's discuss why it's such a powerful savings tool for education. Tax advantages. One of the biggest benefits is the tax-free growth. Your contributions to a 529 plan grow tax-free, and as long as the funds are used for qualified education expenses, you won't pay federal taxes on the earnings. In some cases, you may also be able to deduct contributions from your state taxes, depending on where you live. High contribution limits. Unlike other education savings options, 529 plans offer very generous contribution limits, often up to $500,000 or more, depending on the state. This means you can save as much as you need without worrying about annual caps. Flexibility. If your child decides not to attend college, or if there's leftover money in the account, you have options. The funds can be transferred to another family member without penalties, allowing flexibility for changing educational plans. Lower impact on financial aid. 529. Plan assets are considered the parent's assets when applying for financial aid, which means they have a relatively low impact on the financial aid eligibility of your child compared to assets held in the child's name. Qualified expenses. The money saved in a 529 plan can be used for a variety of education-related expenses beyond just college tuition. Here are some of the key qualified expenses. Tuition and fees. This is the most common expense covered by 529 plans. Room and board. If your child is enrolled at least half-time, room and board are considered qualified expenses, whether they live on campus or off campus. Books and supplies. Books, computers, software, and other required supplies are also considered qualified expenses. K-12, tuition. Under the Tax Cuts and Jobs Act of 2017, up to $10,000 per year can be used for K-12 tuition. Student loan payments. Recently, the Families can use up to $10,000 to repay student loans, expanding the usability of these funds. Who can contribute to a 529 plan? Anyone can contribute to a 529 plan. Parents, grandparents, aunts, uncles, and even family friends. This makes it an ideal tool for family members who want to support a child's education. Contributions are typically made with after-tax dollars, but the earnings grow tax-free. How to choose a 529 plan? Choosing a 529 plan can feel a bit overwhelming given the number of options available. Here are some steps to help you narrow down your choices. Consider state tax benefits. Many states offer tax deductions or credits for contributions to their own 529 plans. If your state offers a deduction, it might make sense to pick the in-state plan. Look at fees. As with any investment, fees can eat into your return. Look for 529 plans with low management fees. Investment options. Consider the investment options that the plan offers. Some plans have age-based options that become more conservative as your child approaches college age. These can be a good choice if you prefer a set-it-and-forget-it approach. Portability. Remember that you are not restricted to your state's plan. You can invest in any state's 529 plan, which gives you the flexibility to find a plan that best suits your needs. How much should you save? Saving for college can be daunting, but it's important to make a plan that fits your financial situation. One rule of thumb is the one-throw rule. Aim to save 1/3 of the total cost of college through a 529 plan, expect to cover 1/3 with financial aid, and pay the remaining third from current income when your child is in school. Every family is different, and it's essential to set realistic goals for your savings based on your financial circumstances. Potential risks of a 529 plan. While 529 plans offer substantial benefits, it's important to be aware of potential drawbacks. Penalties for non-qualified expenses. If you use 529 plan funds for non-qualified expenses, you'll incur taxes on the earnings portion of your withdrawal, plus a 10% penalty. However, there are some exceptions, such as if the child receives a scholarship, in which case the penalty is waived, though taxes still apply. Investment risk. Since 529 savings plans invest in market-based securities, the value of the account can fluctuate. Your balance could decrease if the investments perform poorly, which is a risk factor to consider when saving over the long term. Limited prepaid options. Prepaid tuition plans may not cover all the costs of college, such as room and board or other expenses. They are also limited to certain states and institutions, which can reduce flexibility if your child chooses a different educational path. The Secure Act 2.0. A new opportunity recently, the Secure Act 2.0 has made 529 plans even more attractive. Now, if your child doesn't end up using the funds for education, up to $35,000 can be rolled over into a Roth IRA in their name without penalties. This new provision makes 529 plans a more flexible tool, ensuring that your savings won't go to waste if college isn't in the cards for your child. What happens if your child doesn't go to college? One question we hear a lot is, what if my child decides not to go to college? Well, if your child doesn't end up using the funds for education, you have several options. Change the beneficiary. You can change the beneficiary of the plan to another family member without penalty. This could include siblings, cousins, or even yourself if you decide to go back to school. Non-educational withdrawals. You can withdraw the funds for non-educational purposes, but keep in mind that you'll have to pay taxes on the earnings, plus a 10% penalty. Wait for future use. There is no time limit on a 529 plan, so you could keep it open for potential future use, whether for the same child or another family member. FAQs. about 529 plans. Let's quickly go through some frequently asked questions about 529 plans. Can I use a 529 plan for international schools? Yes. Many international colleges and universities are eligible institutions under the 529 plan. You can check the school's eligibility on the Federal Student Aid website. What if my child gets a scholarship? If your child receives a scholarship, you can withdraw up to the amount of the scholarship from the 529 plan without incurring the 10% penalty, though you will still need to pay taxes on the earnings portion. Can grandparents open a 529 plan? Absolutely. Grandparents can open a 529 plan for a grandchild. However, be mindful that withdrawals from grandparent-owned plans can affect the child's financial aid eligibility in certain situations. A real-world example. Let me give you an example to illustrate how powerful a 529 plan can be. Imagine starting a 529 plan for your newborn child and contributing $200 per month. Assuming an average return of 6% over 18 years, you could accumulate over $75,000 for your child's education, and that's with just $200 a month. Now imagine adding occasional contributions from family members, like for birthdays or holidays, and you could end up with a substantial nest egg to help cover college costs. Why you should start now? The power of compounding is on your side when it comes to saving for education, and the sooner you start, the more time your investments will have to grow. Even small contributions can add up significantly over time. Don't be intimidated by the cost of college. With a 529 plan, you can create a manageable, effective savings strategy that grows alongside your child. The way forward. Hope that this overview of 529 plans has helped demystify how they work and how they can help you save for your child's future. The key takeaway is to start early, contribute regularly, and take advantage of the tax benefits that 529 plans offer. Whether your child is a newborn or already in school, it's never too late to start planning for their education. If you're not sure where to start, consider speaking with a financial advisor who can help you find the right plan for your needs. Additionally, make sure to research the plans offered by your state. You might be eligible for tax breaks and other benefits that can make a big difference in the long run. Subscribe for more financial insights. Thank you so much for joining us today as we explored the ins and outs of 529 education plans. We love making these videos to help you make informed decisions about your finances. If you found this video helpful, make sure to give it a thumbs up. And if you haven't already, hit that subscribe button and ring the notification bell so you never miss out on our latest content. We'd also love to hear from you. Are you already using a 529 plan? Do you have any tips for other parents just starting out? Drop your thoughts in the comments below. Let's keep the conversation going and learn from each other. Until next time, keep investing in your future and stay financially savvy. Thanks for watching.